Okay, guys, welcome to your weekly outlook for the 3rd of November 2025. And what I'll be looking at this week is just the overall direction of what we can anticipate on the indexes. Um, due to the lack of data presented to us by the US government, we'll be keeping it short and concise and just really focusing on what there actually is that we're being offered. Couple of weeks ago, we spoke about the dollar index and the highest probable direction it was going to be moving in. I highlighted the buy side that we had in our previous quarter or in our previous cycle, which was the mid-year quarter, Q2. We had priced in this external buy side liquidity inside of a new day opening gap shortly after Trump was elected, shortly after he started working with the tariffs. And I highlighted this area as a potential draw on liquidity back when we were down here. Something to pay attention to was the SMT, which we had at the lows. Just want to make sure that I have everything on the chart. The SMT, which we had at the Q2 lows, they failed to sweep, or they failed to trade lower than the Q2 lows, which was the specific low yield shade between Q2 and Q3. And then we saw an impulse movement towards the upside inside of this little consolidation range which we were trading inside of. This was early or late Q3, early Q4. As we were entering into Q4, we had priced in this fair value gap or the imbalance on the lower end of this, targeting the internal buy side liquidity, which we ran through effortlessly. Proceeded to retrace back down into the range, the overall range from this low to this high. That should be around about the 50% of that, or just the upper 50% of that range, and proceeded to price in more bullish PD arrays and respect them up until we've now raided the internal buy side liquidity or the engineered buy side liquidity within Q4. I do think for the dollar index, what we can expect is that we'll most likely trade towards the upside or continue the momentum that we've already been pricing in, which is buy side delivery, up until we eventually get above this new day opening gap, the premium end of that. Right, the initial target, now we've ran through all these levels, both the induced liquidity and our pre-existing liquidity that we had, would be the external range based off of our Q3. So Q3 is external high, the buy side liquidity resting above that. I think that that's what we have in target side for DXY, and then eventually the internal high during Q2 and possibly this internal high during Q2. But we're going to keep it short term. We're not going to overextend ourselves. The goal is really just to watch what price does at these levels if it has the willingness to continue higher. I do think that the dollar index is extremely bullish, especially with what Trump is doing in office currently. Yeah, that's about it for the dollar. I want to keep it short and simple, and we'll move on to the Nasdaq. Right. So getting into the Nasdaq, we're going to start out with our daily time frame. From the 1st of October to the 1st of January, this is our segmented price action for Q4. What we can see is we've traded lower during the beginning of Q4, swept an internal sell side level, and proceeded to trade higher. Even though we saw a lot of sell side volume or sell side delivery within this down close candle that we have here, it was followed up by a new week opening gap. Right, so a bullish new week opening gap, proceeded to trade lower, down into that new week opening gap, bounce off of that level, price in all of these down close candles in here, and then take out the engineered buy side liquidity above these two relatively equal highs. The moment that we got above those highs, it showed no sign of retracement or no sign of slowing down. Right, we proceeded to price in another new week opening up. I think this one was about 200 to 300 points. And we proceeded to close above that without forming a retracement back into that level. Right, we formed these highs now. which is the all-time high for Nasdaq, or well, at least for the cash index provided by Capital.com, their feed. The high comes in at 26,255, right? So now that we've priced this high and we've seen an impulsive move towards the downside, but let's get into the actual bone and grits of what's going on within this range. Right. So our daily levels, as we're looking at this range, which has been priced in during Q4, the initial quarter that we had in here, all right, sweeping the sell side, was a continuation of what was offered in our previous quarter, right? So we've had a continuation in here, and we've proceeded to price in this high. I can't necessarily call this high as an all-time high. All that I'm looking at it as is just a swing high for this specific level, or for this specific time-based or the segmented price that we're looking at, right? So we formed our swing high in there, and we've got a range low as well as a range high. Now, the next step as a trader is just to identify what do we have that exists within our current range. Obviously, we've looked at the new week opening gaps that exist within the range. We know that this one hasn't been traded into necessarily. So I'm keeping my eye on this gap to see if we really want to go down into that and seek the sell side below. This was Monday's low, so previous weekly low. Yeah, that's the initial drawn liquidity that I have in mind. Obviously, bearing in mind that it can trade higher and we can seek buy side first, we do allow room for that. So the initial drawn liquidity for me would be the new week opening gap towards the lower end of that price, or towards the lower end of our range. We've got our Q4 opening price, which was this on the Friday 24th of October. That opening price is an extended, can't really see it in between these two, but it is there. Q4 opening price, we've got this large down close candle, this really big body down close candle. After we've now broken above this area and traded outside of this range, right? It happened on this candle. We haven't seen any sort of retracement back down into the opening price on this down close candle, which would otherwise be looked at as the daily bullish order block, right? We've traded into the 50% over here, the mean threshold. We proceeded to break higher and close above it. We saw us trade back down into the propulsion block, which exists inside of this range, after we've already reacted off of the bullish order block, mean threshold. Back down into the propulsion block, and then we proceeded to break higher. In line with that, we do have our daily breaker block as well. If price does want to retrace to this point, I think that we'll find some sort of support at this level. It's also in line with our equilibrium level on our fib. Can't really see it there, but the 50% is just sticking out. If we want to retrace, I do think that we'll find support at this level. There's a lot of confluence that suggests that this should uphold price. Once we get to this level, something key to pay attention to would be, do we have the momentum to actually break down through it and target the external sell side? I think the first stop would be the internal sell side levels that we have existing here. These are low resistance liquidity runs, by the way. And then the next stop would be the external sell side, to see if we can trade lower, maybe into Q2's or Q3's lows, internal lows that we have priced in here. But yeah, so that is the daily time frame for the Nasdaq. Going down to the 4-hour time frame, we want to look at what we have to offer. Right. So last week's price action, we've priced in another range, external buy side and external sell side. The low on that range falls into our 4-hour fair value gap that we have from the previous week, right? So the 27th of October. Previous week 4-hour fair value gap. It's not a discounted rate, but it is a form of discount that's being offered inside of the fair value gap. And below these lows is internal sell side liquidity. Sweep that, proceeded to rebalance or trade back into the 4-hour fair value gap, found support there, had multiple touches, and now we've basically just bounced off of that. Right? Key areas that I'd be paying attention to are going to be the 4-hour premium fair value gap that we have priced in at the highs, as well as the 4-hour mitigation block, which is this large down close candle over here. If you can find some sort of resistance at those levels, I do think that we will target the sell side, both internal and external sell side existing at these lows. Not really much on the 4-hour for me. What I'd be looking at these levels for is just pairing them with time of day. So tomorrow during London at specifically 3 a.m., I'd like to see where we are trading. If we're trading inside of this 4-hour fair value gap, I want to see us seek the sell side and form the high of the day over there. Going down to the 1-hour time frame, and getting rid of our 4-hour period raise. We're looking at the 1-hour time frame. We can see that we've got this range again. We have the premium wick marked out over here as a gap, some sort of gap. We have the internal buy side, which rests above the side, the external buy side, which comes in or which acts as our range high, and the external sell side as our range low, as well as all of our internal areas of liquidity marked. Right. So initially we saw a sweep above internal buy side liquidity, which was this specific high over here. I think this was Thursday morning's high, which traded into that fair value gap. We saw a sweep the liquidity above that and break down further. Right. Key thing that I'm paying attention to on the 1-hour time frame, because it is a narrative based time frame. This is the time frame that I like to come to in order to read the actual order flow, or read the actual daily order flow. Pay attention to all of the up close candles which we have inside of this range, right? We're paying attention to our ranges, our internal ranges, as well as all of the up close candles which act as bearish order blocks. This would be our first bearish order block, right? Finding resistance over there on the 10 a.m. candle on Friday, then proceeding to trade lower and break down, pricing in the 4 or the 1 hour propulsion block, bearish propulsion block, right? On Friday during the PM session, we saw a retracement into the propulsion block, right? Not closing inside of this 1 hour fair value gap over here. We then proceeded to break down lower, and we failed to take out this low and our external low, right? So these two are relatively equal. This over here could be a potential draw on liquidity for Nasdaq as we go into the day and tomorrow specifically. Something to pay attention to is, do we want to revisit the propulsion block or the resting buy side liquidity above the PMIs from Friday? We've opened up now on a bullish new week opening gap, right? It's not that big. It's about 50 points. Opened up on a bullish new week opening gap. Do we have the momentum to, or does this gap have the momentum to push price higher in order for us to seek maybe the internal buy side? I don't know. Something to pay attention to would be the time of day. So what I'd be waiting for here is 3 a.m. tomorrow during London. I want to pay attention to where we are sitting relative to that 4-hour time frame, relative to those higher time frame PDRAs. Right? Do we actually want to seek the 4-hour fair value gap that we have in here? It would make sense for them to run the PMIs, because that would be trading directly into the 4-hour fair value gap, and then that would lead to us selling off, right? Inverting or inversing the new week opening gap that's been supplied with us this week. So yeah, that is about it. Keeping it short and concise, just focusing on the near term and not overextending ourselves. These are my expectations for the next 2 days, and I'll update it as I go along.